course, I always give kudos. If you're the kind of person who is creative, you're productive, they give you any amount, you can turn it to any amount. You are really a skilled trader. But if you want to be a top trader in the industry, there are certain things you have to get yourself accustomed to. I don't believe in careless trading. Throughout this week, I only took one trade, and that one trade was GBP JPY. We made 7% profit on that trade throughout this week. Everybody in my community knows this. Last week, we had about 2 trades or 3 trades only throughout the whole week. Gold ended up doing 14%. So when you start working with percentages based on the capital you have, based on the agreement you have with people who are giving you money, so many things don't excite you anymore. The fact that my trade is 3 pips stop loss is not as exciting. Because now I'm working with percentages. I don't need a 3 pip stop loss when I'm not trading $50. I'm comfortable. Do you understand? I can have 40 pips as my stop loss.
Definitely. As long as you have calculated it.
Do you understand? I can have 80 pips for a swing trade. And the 80 pips I have for that swing trade, I know that in the next 1 week, I'm doing 300 pips in, for take profits. I don't mind, right? And at the end of the day, you will still get your 3%, 4%, 5%. Now, when you have access to large capital, $500,000, $700,000, that's when the value of these percentages 10% of $700,000 is 70K.
Just 70K.
Do you understand? So why am I fighting 5 pips stop loss when 10% of the equity I'm holding is $70,000? It's not the same league. It's not the same category anymore. Now, it's only just the certificate and the opportunity that differentiates you from being an institutional Forex trader, right? So I had to transition to price action, especially price action that has enough confirmations. My zone trading has confluences. I was hedging for a while. Hedging is an old strategy. It's a banking system. It's everybody knows Martingale. If you search hedging, you see Martingale. If you optimize Martingale, you can make money. But hedging did fail us when market conditions became a little bit unfavorable.
Yeah.
Because for hedging to be effective, you need volume, right? For the model we were using to be effective, we need volume. Hedging is simple. You buy, you sell. When there is enough volume, you're doing 2x of your original position. So when you reset the module, you start again. So Martingale tells you if you put $50 buy, $50 sell, your buy hits $50 profit, your profit margin is maybe 100, you take it out. If you lose 50, when you're risking again, you have to risk 100.
Yeah.
That's Martingale. So Martingale, your entries have to be double. This is what their name is, they're hedge funds. That's what they do.
Yeah.
A hedge fund is part of their responsibilities.